Breaking news report this morning on LALATE, just before sunrise, a series of major economic numbers were released. Gross national product for the third quarter, new labor numbers, and of course the personal consumption expenditure index. Let's go over the breaking news that happened just minutes ago here on LA before the sun even rises on the West Coast. The first major issue that was released minutes ago was the personal consumption expenditure index, which is the big inflationary gauge that the Federal Reserve uses in determining inflation. That number came in at its best levels for many, many months, showing that inflation is coming down. Relatively impressive surprise beat again on that PCE. Why do we like the PCE? Because it's a very good indicator of what the CPI and the PPI is likely to say for the next read next month. Now, a series of major things that are great about this. One, it means that your cost of living is going to come down, food and eggs and milk, if that PCE holds up, and it likely usually does. Number two, it means that you got locked in to the best darn rate you get locked in for your raise of your benefits. Remember, as discussed on this channel over the last year, we wanted to make sure that your benefits were locked into inflation at its highest point. And if today's PCE number is accurate, which it likely is, because it has a very long track record of being accurate, that means that getting locked into that wonderful raise announced on October 13th for SSI and SSDI was literally on the money, to the point. Could not have been better. Exactly when you would have wanted to be locked in, because now inflation's coming down and you would have gotten less benefits. That's not happening. So congratulations to all SSI and SSDI, Social Security and Railroad benefits recipients, that it now looks that inflation is starting to ease after you've locked in the highest inflation of a generation. You got it absolutely perfect timing as you would want. So now let's go to the second major detail that was released minutes ago. This is actually the story that is leading this morning. Gross national product, third quarter released, came in at a 2.6%, higher than expected. Wall Street is looking for 2.3. Now remember, this is third quarter. First quarter was negative. Second quarter was negative. Two negative quarters of GDP growth. Gross national product of the U.S. economy. Is the economy growing? Is it shrinking? Two negative quarters means we are in recession. Hence, we were in recession as of the second quarter by definition. But people expected this quarter to be a positive number, the third quarter released minutes ago. And they expected a positive 2.3 when it come in at 2.6. Interestingly enough, the reaction to the news is exactly as I would report as well. Does it mean we're not in recession? No. Does it mean we are out of recession? No. Why is the number positive? It means that we're just having a little bit of a pop upward for a short period of time, and that it's likely the fourth quarter will be a negative number. Now, one of the things I'll detail later on LA is that when you look at the components of that gross national product released minutes ago, the components were negative. Some of the components were clearly negative. So do not read just an overall number as the only part of the story. There's a lot more to it. Third major economic data, I told you there's a lot being released this morning, is the labor number. The worst number of jobless claims since early this year. I believe it's since April, but I'll have it on air on LA Live today. It is the worst number of jobless claims, so it means it jumped, means it's up, since early this year. Again, this is what we learn on the channel, that as the recession grows, labor falls apart. That is indicative across the board. So three major economic data. Let's go to the markets. One of the stories we were detailing yesterday on LLA, but I was unable to record until before the markets close, and you saw the news after the markets close. Facebook was a major miss. Miss on top, miss on bottom. Third quarter earnings from the major company, now Meta, formerly Facebook, missed on top and bottom. What is the reaction on the markets today? Hideous. Hideous. The stock is down $30. It's a $130 stock yesterday. Today it has lost nearly 30% of its valuation, wiped out in less than 24 hours. Can you imagine? Yes, this is why you have to know everything about this economy. whether it is a social media stock, or whether it is how many people are in the store at the local Target. You need to know all these elements because Facebook losing 30% of its valuation overnight is a major story that impacts your wallet, even if you don't own stock in Facebook. And even if you don't use Facebook, it says there's something wrong with the economy. And the reason why it was a miss, less earnings. Millions are less miss on top, less revenue. And again, there you go. Four major stories to start the day. And boy, what a day it is. Recap. First, gross national product, third quarter released minutes ago. It was a positive number, higher than expected. But analysts are saying the same thing as I would as well this morning. Do not think you're out of recession. You're not. Do not think you're not going to recession. You're not. You are. Number two, personal consumption expenditure index, PCE, released minutes ago, showed inflation fell lower than expected. So it was a better number, that PCE, than expected. Could the Fed pull off a soft landing? Likely not still. And number three, the labor number was the worst we've seen in several months since early this year. That's indicative of, again, a recession. Labor falls apart later in the recession. This is a breaking news, slightly elongated, short. But thank you for joining me. Join me all today on the channel, 9 o'clock mornings LALATE. And I'll see you there, continuing at 11 o'clock noon, 1 o'clock afternoons, 2 and 3 afternoons, and then we go into evenings. Stay informed.